Hi, Chris Abbott here, and I'd like to spend a moment to discuss a mortgage option that is being utilized in most cases without the client even knowing. It's called a collateral mortgage, and I've also included an excellent video from Marketplace exposing the pitfalls of this type of mortgage product. Simply put, a collateral mortgage is when the lender doubles their security by obtaining both a lien registered against the property and a promissory note. Unlike the standard charge mortgage, the collateral mortgage is difficult to move to another lender at the end of the term, and it costs you more to move to another lender. Also, with a collateral mortgage, if you go into arrears or default, the bank has the right to raise your interest rate by up to 10 percentage points. On a debt as large as your mortgage, this could mean a significant charge. Also, the lender can register a higher property value, up to 125%, so that if you need to borrow money against your equity, it can be done quickly, for example, without any legal fees. This may sound like a good thing, but it is a double-edged sword. Basically, having the flexibility to borrow increases the time it takes to pay down your mortgage. Also, once you register your certain value with your lender, the valued amount will not be recognized by other lenders. Another downfall of this type of mortgage is the fact that all of your loans are linked. If for any reason you default on your mortgage, the bank can roll any other debts that you have with them, such as a line of credit or credit card debt. This means you can lose your home and the ability to use those other products as well. Although collateral mortgages are not a new thing in Canada, they have been creating buzz within the last couple of months. And mortgage rates continue at an all-time lows, and locking into a collateral mortgage may not necessarily be the best thing for you. Please be an informed client. For a full explanation surrounding your mortgage options, please contact me to put you in touch with one of my extended team of professionals. Have a great day.
If there's one thing that Dennis Wall doesn't like, it's a big snow job, especially by his bank.
Things are kept hidden from consumers, and consumer really has to be wary.
He's wary of the way TD sells its mortgages.
It's kind of like walking into a used car sales room.
A few years ago, Dennis signed on the dotted line for a new mortgage.
Everything seemed to be exactly as it had been before.
Turns out it was quite different. He'd signed a collateral mortgage, one that automatically lets you borrow more than your house is worth. What they didn't tell him? It's harder to switch to another bank at the end of the term, and it costs money to do it.
Oh, we were royally pissed off, actually. I don't know if you're going to use that.
Marketplace visited TD.
Are there any differences in the mortgages here compared to the other banks?
Dennis was right. We found they weren't very upfront about their collateral mortgages and how they work. After our story aired, TD and the other big banks promised to explain different types of mortgages in easy-to-understand language and make that information available online and in branches. So now we're heading back to a couple of TD branches to test those promises. Giving us her take? Personal finance expert Rubina Ahmed-Haq. She's a business journalist and money blogger.
These conversations should start with the word collateral, because that's going to be unusual and different to customers. So they're going to say, what do you mean by collateral?
So is TD delivering on its promises? The first test, do they use that crucial buzzword, collateral, and explain it?
I just wanted to know just basically like about what you guys offer, that kind of thing, and how it's different than what everybody else is offering.
I mean, I'll be completely candid with you. Most of the banks that you'll go into, the sort of terms and rates and everything are going to be pretty similar.
I think the word collateral not coming out in that is a huge problem, because that is the major difference. Yes, you're still going to get an interest rate that you can negotiate at that time. Yes, you're still going to get a term. All these things we're already familiar with. But tell me what I'm not familiar with.
Mortgages, it's essentially, like I said,
At this branch,
it's a lending product.
it takes a while before this guy mentions collateral.
It's a charge, right? Like, so it's technically collateral. So the bank has that collateral on your property, and that's why we're able to lend lower interest rates, right?
And when we ask him to explain it,
TD has a charge on registered charge on your property, right?
Okay.
So that's what the mortgage is tied against, is the home.
Yeah.
Right? So if we lend you money, that's what the charge is.
How well do you think he explained it, given that TD has committed to using language that is clear, simple, and not misleading? I mean, if you understand something, to its core, you're able to explain it in plain English, and he's not explaining it.
time for test number 2. Do they explain it can be more difficult to shop around when your mortgage term is up?
Is it just easy to kind of just move on to a different bank?
It is, but I don't know if it actually advantages you. If you're constantly shopping around on rates, you're losing out on sort of the substance of the relationship, and that's what really improves on things.
Not explained here. And at another branch,
Like if I'm with TD, like at the end of 5 years, if I want to...
Difficult, but you have to realize that.
but it is difficult and it can cost you.
It would be expensive because you'd have to pay discharge fees, you might have to pay legal fees, appraisal fees, all different types of fees that would be involved as if you were getting a brand new mortgage.
Neither branch clearly explains all the strings attached. So far, TD's not faring very well. So, test number 3. Do they have that information they promised customers?
Let me see what I can actually give to you. Yeah, that's it. That's what I'm trying to find, is something that I can actually print out for you. Let's see here.
No info here or at the other branch.
Banks have said that they're going to provide clear language, have good information available about collateral, mortgages. So why isn't that available at your fingertips? Having looked at all of this footage, what do you think of our visits to TD? I think they really got a failing grade.
What would our expert like to see?
Make it really super duper clear so that nobody, including my grandmother, would be confused about what a collateral mortgage is.
We were banking on an interview with TD, but the company says no. Sends us a statement saying they're working with sales staff and making information available. Back in Ottawa, TD's on thin ice with Dennis Wall.
The moral of the story for the consumer is, it's the same old story, find out more. But don't assume you are being given all the information that you do require to make a decision.
Because he says he's been snowed too many times.
I have difficulty even walking into a branch of TD.